Which sector is most vulnerable as we push this deadline out?
Well, look, I think a lot of the U.S. consumer sectors, I think a lot of the industrial sectors that are leveraging, partnerships and agreements with Mexico and Canada are certainly most vulnerable. I think as with a lot of the policy discussion that we've heard over the last 9 months or so, our expectation is that you're not going to see sort of a worst case scenario from the perspective of those benefiting from the agreement. And the other thing to keep in mind is that unlike maybe a year ago, you're seeing stronger global growth, which is also supportive of places like Mexico and Canada in some of these negotiations.
Well, fair point. Also, the conversation is what happens to supply chains, right? They're so embedded in Mexico and Canada. If U.S. companies, though, are forced to go to Asia to map out a new supply chain, what's the longer-term implication of something like that?
Well, clearly, I think that's a negative for things like profit margins. It's going to be more expensive to produce goods, to bring them back. And so I think at the end of the day, that's going to be a negative on the margin front. That's where you're going to see the most pressure. I think you're also going to see some international competitors step up and look to fill that gap.
Who has more to lose if there's a real breakdown, the United States or Mexico? Because at this point, as I understand it, if they go back to what we had before, the tariffs are actually larger on U.S. exports to Mexico than they are imports from Mexico.
You know, I think in a vacuum, at the end of the day, the U.S. economy is much larger. And so, it's easier for us to sustain some of that. But I think that clearly there will be many companies here within the U.S. who would potentially be big losers in that sort of worst case scenario.
Dollar MEX dropped lower on the back of a breakdown in talks. A deadlock, seemingly good news for Mexico, apparently.
Well, I mean, you look at it in the way that Mexican markets have reacted, whether it's the equities or the currency so far this year. Clearly, those were two markets that were very much under pressure post the election. And I think the reaction and the recovery that you've seen so far is telling to what markets are thinking about this deal.
Stephen, more broadly, the president and the administration can't get it done. They wanted to sort out Nafta. They can't. The president of the United States wanted to tear up the agreement with Iran. The people around him said, no, don't do that, reportedly, and they haven't done that. So more broadly at this point, should we fear a breakdown in Nafta talks, a breakdown in the way that some people painted a picture of 12 months ago?
Well, I think if anything, what you're looking at is a continuation of the status quo rather than a breakdown of talk that leads to the end of Nafta.
Yeah.
That's generally what we've seen with a lot of these policy discussions, and frankly, markets have viewed that positively because the broader global fundamentals are strong, and so this is more a sign that this won't impede that momentum that we're seeing.